Coming into the week, investors were hoping for greater clarity and direction from a wave of corporate earnings results. But we finished the week just slightly higher for the major indices, in part because, well, earnings were generally better than expected. But the problem was the Dow Jones Industrial Average, really, it was a split decision, right? On one hand, you had American Express, General Electric, and United Health. They rallied on earnings results. But then there's the other part of the equation. IBM, Procter & Gamble, and Johnson & Johnson, they were simply taken to the woodshed. And then there's Apple, which didn't report earnings, but took a shellacking on growing speculation that there will be disappointment for the quarter. Anxiety began yesterday, but the bottom really fell out today when the Morgan Stanley analyst Katie Huberty expressed concerns about iPhone sales. Now, ironically, she only lowered her share price target on the stock to 200 from 203. In fact, she still thinks the stock is a buy. Any long-term holder of the stock has been through these periods of anxiety ahead of earnings, particularly in this Tim Cook era. I'm personally holding the stock in my retirement portfolio, so I'll ride the waves. Now, taking a broader look at the market this week, well, it did reflect those big earnings beats and the surge in crude oil, energy, industrial, material names. They led the S&P pack. Then there were consumer discretionary names also posting very strong gains, riding the coattails of Netflix, Ulta Beauty, and Amazon. But utilities were also strong this week, so that's a sign that investors still continue to seek a certain level of safety. Another thing eating at the markets, the Federal Reserve just seems to be champing at the bit and ready to derail this economy. I mean, that's the feeling that many folks have, and they believe it's stronger now as incoming New York Fed President John Williams, they think he's the one who's prepared to really sway the body with a much more aggressive plan for fighting inflation, both real and imagined. It was his comments at the start of the week that started haunting many and helped spark a move in a 10-year bond yield that finished up over 4 basis points for a 2.956 right there. You know what? To be honest with you, I'll be thrilled when the yield hits 3%. It's silly to think that that should be the death knell for stocks. By the way, next week there are a whole lot of very important earnings names, but look at some of this week's oversold names, like a Lam Research on the tech side. I think we got a lot of opportunities to make a lot of money. So be ready. When the market rebounds, there's going to be a lot of opportunities.